Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it's Friday, and I don't know about all you. Oh my gosh, wait, hold on. I do not have all of my audio set up correctly here. Give me a second. Oh, you know what? I have this, the light is messed up too. Let's fix the light. Yeah, Asher was on the warpath yesterday. All right, so I don't know about all you, but I'm ready for the weekend. I think I'm already checked out, but we cannot do that yet because today is a pretty important options expiration, quarterly witching. So yeah, and we do have a little bit of news just now here. Hold on, what is it that I'm missing? Oh yes, New York Fed manufacturing negative 20.9 versus an expected -7, so manufacturing continues to just be dismal. And export prices month over month, spot 8 versus spot 4. That's not good. That's probably why the treasuries sold just a tad. The treasuries did sell just a tad there. All right, let's come in and take a look at the charts, kind of see where we're at. Okay, so I do get rollovers for all of the currencies. So let's do that. All right, so yesterday in the treasuries, what a dismal down move. Ooh, wow, that was a biggie. That was one of the biggest moves we've had in a long time. Kind of weird how it played out. I do still think that a lot of the downside maybe had to do with the Japanese yen, but you know, the market synopsises that I was reading and so forth, it didn't really opine on that. So I don't know. It was a big down day, and that had knockoff effects on all of the other markets. S&P 500 did not take to it too well, but you know what? They're still above 5,200. So I would say that they're actually taking it pretty well over there in the equities. Oil is okay too. Oil was actually moving higher yesterday. Gold and silver did not get hammered nearly as hard as the treasuries did. They are still kind of bid. And then copper is having another up day in the overnight. There's the Japanese yen. There was a big story for the Japanese yen that initially helped it, but then they sold it. And you got the dollar kind of kissing 103, but not able to stay up there. And then you got Bitcoin kind of taking it on the nose towards the end of the day, and now quite a bit lower this morning. So that's where things are at. Let's, I was thinking I wanted to do some note taking. I wanted to do a little bit of note taking. I've been kind of working to get myself a little setup here for notes. Let's make a trading folder. And now that is probably too small, isn't it? There's no way you guys are going to be able to read that. Is there a way for me to make the font size larger here? No, I'm going to minimize that and figure that out. So that was the first thing I should have thought of before I pulled that up. Ah, it's the terminal emulator that I need to change. Actually, let's see here. How should we do this? I thought I had an easy way to duplicate a profile, didn't we? There we go. Do that one. How about that? Nah, I think even bigger than that. Yeah. Yeah. Oops. How about that? Huh? Can you guys read that? Is that big enough? I mean, it's bigger than the numbers that are on there, so I think. Okay, so Lowe's. Make a heading here. Lowe's. Options expiration. It's a big thing for us to keep in mind. Currency. Futures rollover. I'm going to mention that specifically, and equities. Futures rollover. So it is a quad witching, but those are the ones that I'm particularly interested in. And then we're going to have momentum from momentum in treasuries to downside. Okay, so these are the biggest things that I think we got going on here. I think I'm not supposed to use a dash to make a list. Oh, no, that's right. I would have thought that it would have colored it for me, but whatever. Let's see here. What else do we got? Wow, man, the treasuries are not wasting any time. Right. Mild economic news. Do we have anything later today? University of Massachusetts or Michigan. U of MI. Consumer sentiment is a pretty big thing. They're expecting 3.1 for 1 year inflation. It has been coming in slightly hot, so they're hotter than 3.1. Market may react adversely to that. Let's see what else. Oh, did we get, let me come in here, because there was this whole thing about there was going to be wage data from Japan. Did we actually get that? Let me come in here. Okay, Japanese yen is pressured despite a strong outcome to the Rengo wage tally, possibly by the rumors sell the fact move, given that the data was expected to be on the hawkish side, currently holds towards the upper end. Okay. Let's put that back up here. Actually, let's put this at the top. JPY strong wages. Buy rumors, sell news? Question mark. Okay. And I think that's everything that we have to worry about. Well, and I guess just one other thing that I want to note is FOMC next Wednesday. All right. So those are the things that we got going on today that are the most important. Now I'm thinking here, I'm liking that. I'm thinking I don't like the way that my editor here looks. There we go. That's a little bit better. Yeah. So, now with all that in mind, I think that the options expiration is likely to keep us somewhat constrained. I think we're in an okay place, but it's going to be towards 5,200, right? Oh, we're not programming anything. We're just taking some notes. We could program something if you want. We could program something if you want. Yeah, so I think that the S&P 500 is going to be a slight sell. Let's come in and put that here. Sell towards 5,200. Okay. In the treasuries, though, well, the treasuries are headed for that 110 even, aren't they? Yeah, that one looks pretty likely. Pretty likely. Let's do, should I do it like that? Is there a better way to get it to, yeah, like that. Okay. So that should maybe give you a little bit better of an idea of the things that are going on in my head when I start. I don't know if we'll show that all the time, but like I really want to take more notes. I'm kind of setting a goal to like start taking meticulous notes at work. So that was a good test of the little system that I've been working on. I think I'm gonna move all of my Evernote notes over to this system. I got something on my phone that works because I'm so sick of every time that I pull Evernote up that it wants it's spamming me about something. You know, I just can't stand it. I'm so done with them, and they limit you on the number of notes that you can have. So I'm just done with them. So I got my editor all set up. I've been doing that, you know, for a while. Been using that at Helix Editor for a while now, for a few weeks at least. And I'm using SyncToy to sync it between my phone and my desktop, and maybe I'll add it to the server and the laptop too. We'll see. Well, so they have slowed down a little bit here. I didn't catch that there was like huge transactions or anything. They have traded 18 and 16,000 contracts at 0.2 and 0.2 half, which is considerably more than all of the prices before we kind of slipped down here. I would think that that's all fairly significant. But that's all we got so far. You do kind of got me on the thinking about maybe we could program something here. Well, let's take a look through Twitter and our usual sources and so forth first. See if there's any interesting pieces of news that we missed or other discussion points. Nassim Taleb, how can you detect a BS vendor / consultant? They use generic words like mission to solve / fix a problem versus we fix your bathroom drainage problem using plumber snake, auger, and or a high pressure water jet to clear the blockage. Oh, so they're saying like they're not very specific on what they're actually giving you. Because they're just trying to sell it and they don't actually understand it. Snow upgraded to neutral from Cell at Guggenheim. What was what? About the plane. Oh, okay. Nassim Taleb said you can detect a BS vendor when they use generic words like mission to solve / fix a problem. As opposed to, so what you would want to hear is we fix your bathroom drainage problem using plumber snake, auger, and or a high pressure water jet to clear the blockage. But versus, you know, when you get very generic kind of marketing speak. Yeah. Yeah. Okay. A couple of days ago, Ben Shapiro took some heat for saying that people shouldn't retire at 65, implying that humans do better when they are working. Do you agree? I do not agree with Ben Shapiro on that. And here's why. I don't think that my money should be tied, my retirement money should be tied to whether or not I'm like directly working every day. That I have to wait until I'm a certain age to pull it out is total bullshit. The entire concept of these retirement accounts, these tax advantaged retirement accounts that lock your money away and penalize it if you take it out early is all a giant scam to give Wall Street control over our capital. It's the best option. It's the best option for you to do. You're retiring, or it's the best thing for your retirement money, let's say, because you do save a lot with the tax advantaged accounts. But what if we could just save as much as we wanted without having to put it into a tax advantaged account? That if you're a regular everyday person, middle class person, you're making less than like $200,000 a year, I think that you shouldn't pay any capital gains taxes at all. And that if I save up enough and I'm 50, that I should be able to retire with what's in my IRA, even though I'm 50. And there's just, I think it's silly that we have to create this system to force the people to work. Yes, I feel passionate about this one. I understand the argument that there should be better avenues for people to self-direct their retirements rather than taxing them for a Social Security slush fund. Social Security should be optional. Well, I don't know if I agree with that either. But it's it is kind of here again, like the government's take of it is kind of messed up, isn't it? Because the government doesn't want you to use it. The government thinks of it as like, you know, this is a social service that they're providing to prevent society from collapsing, to prevent old people from being homeless and out in the street. And so it's only there to provide, like, you know, supplemental emergency income of some sort, rather than something that we're paying for, you know? Like, I pay for it. I understand why it's necessary to force everybody to pay into it, because if you don't, a very large portion of people simply do not save, do not get pensions, etc., 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 and then we have to take care of them when they get older. And before Social Security came around, it was a major policy problem. It was a major societal problem. There was old people were just homeless in the streets, okay, and like their families wouldn't take care of them. It was just awful, right? But I don't like the idea of pushing the Social Security back. That it's like, well, we live longer, so we should push it back. Oh. Social Security is by definition a socialist policy. I mean, it depends on your definition of socialist, right? I don't think that a social service is necessarily the same as a socialist policy. If you weren't allowed to have pensions, then it would be a socialist policy, right? So like the government providing a service and or the government like forcing a service on us is not in and of itself socialist by my definition, because socialist by my definition is the government taking over an industry. So within my definition of socialism, it allows for the government to compete or supplement the private market without taking it over, and it not be socialist, right? New to your channel, can you explain what setup you are waiting for? Yeah, hold on just a moment here. You're 4 seconds late on the screen. Yeah, so you'll probably get a delay of 3 to 5 seconds. Yeah, that's my point, though. You should have a choice. People like us who are into financial markets, we should be able to opt out of Social Security and invest for our own retirements. Yeah, but then wouldn't a bunch of people opt out and screw up, and then the rest of us would kind of have to pay for that, because then those people would need help, right? Like that's the whole thing. Social Security should be like the minimum thing, right? It should be like the minimum amount to pay for you to live after age 65, right? And I think it does a pretty good job at that. I do think that Social Security has been abused. Oh, mask. Oh, okay. Oh no, wait. You're talking about. You must be talking about something else. Or are you Untold in Discord? Yeah. So I'm thinking here about how I want to cover this, because I don't know if the Social Security thing is that interesting. Because it is a difference of opinion, right? I just don't like the idea that, like, whenever I hear people say, I shouldn't have to pay into Social Security. I should be able to just, invest it myself. Like red warning lights are going off, because that's very irresponsible. If that future ever happens, please don't put that extra money into the market, into the S&P 500. Put it into like a low risk pension fund sort of a thing, because that is supposed to be like the emergency backstop, right? Like your retirement is the stuff that's in the markets. Well, what happens if the market collapses 50% right before you retire? That sort of stuff can happen, and that's where Social Security is supposed to be able to cover you. Okay. No, I'm not retired. My parents are retiring this year though, so it's on my mind. Okay. So Mask, I was actually working towards trying to answer your question in Discord, but I'll just answer it over here. Okay. So the thing that is probably the most useful thing to help you in trading when you're starting out is understanding this fundamental thing about the markets. And this fundamental thing about the markets, I think it goes a long way towards helping you know where to spend your time. Okay. So this property of markets that I'm going to talk about is this. Orders have very strong impact. Okay. So if you went and took $1 out of bonds and put it into the stock market, how much would that change the total market cap of the overall stock market? And you would think, from like a fundamental and theoretical point of view, the market is supposed to be efficient. And so if I put $1 into the market, that should increase the market cap of the market by $1, right? Yes, you're correct. It changes it by $5 to $8. So you've watched that video. Very good. Okay, so the point of that, the point of that whole thing is that the orders really strongly affect things. So if I come in and I buy an instrument even with my one tiny little one lot, yeah, I mean, it doesn't move it very much. It is a trivial thing in the larger scheme of things, but it's only trivial because there are so many more orders out there. But the impact of any one order is actually very, very strong. And so the end result of that is that the market arbitrages things away very quickly. So if I have a setup, say, we have a tendency to move back towards the previous day's point of control, that sort of a thing, right? The market arbitrages those away very, very easily. Okay. Now, there are some things that the market cannot arbitrage away. Those are things based on the market microstructure. Okay. So because of the way that the market is structured, there are certain things that are going to happen and that will always happen unless you were to change the rules of the system. Okay. So a really good example is momentum effects. So I think it's pretty well documented. Everybody talks about it, that, there are trends in stocks, and sometimes you can jump on board a trend in the stock and then it just keeps going and going and going and you make a ton of money, right? Momentum is caused by the order book, essentially, because there's not enough liquidity for these really big players out there to execute against. And as they buy it, it's going to move it so far. And that creates these trends, right? So if we are trading, then what do we want to look for, right? Well, if we want something that is based on the market microstructure. Now, the problem with those edges that are based on the market microstructures, they're going to be very competitive, right? Somebody's going to be making money from it, but they're going to have to compete to get to it. Okay. Now most of the edges of that sort that you're going to see in order flow have already been kind of taken advantage of, unfortunately. Okay. So that doesn't mean that those are useless, but those are all kind of things that we kind of, just keep in the back of our mind to help us understand what's going on right now. Right? So then where does our edge come from? Well, so if we go back to the orders have a very strong impact, right? One of the things is that everybody thinks that the market is informationally efficient. That is, everything that is known to the market is already factored into the current price. Well, somebody could be buying this asset for some completely unknown reason, like that they have to rebalance their fund at the end of the month. And that's going to move the price. And that's going to move the price away from what the fundamental value would presumably be. And so it is the case that if you were able to calculate the correct fundamental price at any one given time of what an asset should be, you would almost never see that asset at that actual price, right? Markets are not informationally efficient. So statistically efficient, very statistically efficient. If I have a setup, any kind of technical parameters, I see X, Y, and Z, and then I take my trade and I tend to make money. That sort of a setup, they can exist, very, very difficult to find and or take advantage of, okay? Versus this, something's going to happen and it's not correctly priced into the market. Those are available all the time. But the issue with them being available all the time is that, there's no guarantee that when you have an edge like that it's actually going to go towards where you think it's going to go, right? Because there could be something else completely random that comes in and pushes it the other way, and it doesn't go in line with that flow at that time, right? Okay, so that is basically the two major sides of day trading, right? You have discretionary trading and you have systematic trading. Systematic trading, you have hard rules and they are extremely difficult to find, but if you do find them, they're extremely reliable. Versus the discretionary side of things, discretionary edges are very, very easy to find, but are not very reliable, right? So if you're starting out, you're likely to go the discretionary side because finding these technical edges through setups are really hard, right? So you go on the discretionary side. So if we're going to go on the discretionary side, how do we deal with that then? How do we deal with the unreliability? Well, we want to know as much as we can about what is actually driving the flows, right? To reduce the chances of there being some sort of freak flow that goes the wrong way, right? And we want to see the things that we think are going to predict the orders. We want to see a pretty big imbalance, okay? So as an example here this morning, if I was going to take a trade, and I don't think that this one is a super strong one, but I'm going to lay out a trade that we could potentially take here this morning. That now would probably be a pretty good spot to do it, okay? And that is, let me pull back up this here. Okay, so here are the things that we're kind of looking at this morning, okay? The Japanese yen had some strong wages, but the market didn't react too much to it. We think that that's a buy the rumor, sell the news. So we are seeing some selling flows over in the Japanese yen and in the treasuries. How would that affect us in equities? Okay, if interest rates are higher, that's going to tend to cause selling in the equities a little bit, okay? Because higher interest rates hurt equities, okay? We have an options expiration. The currencies futures are all rolling over. The equity future options are all rolling over. So you've got everything doing their quarterly rollovers today. That means where the highest interest in the options is at in the S&P 500 right now is going to be at that 5,200 simply because it is such a round number. Okay, so And we have momentum in the treasuries to the downside. We did have some mild economic news that the market didn't seem to like too much. And at 10 o'clock, we have the University of Michigan consumer sentiment. And there's an FOMC next Wednesday. I don't know if we're going to see too many flows from that, but that's just something for us to keep in mind. So based on all of that information, I think I can take a short in the S&P 500 on the hopes that we will move back towards 5,200, with the caveat that I would prefer to be out of that position an hour from now when the University of Michigan consumer sentiment comes in. Right? So you see how I did that? So I wasn't taking like it wasn't a setup, right? There wasn't like qualifications if this and that and that and the other, and then you take a trade. No. Instead, what I did was, from a discretionary perspective, I went and I listed all of the pieces of information that I know that could potentially influence future orders. Things that people might be buying or selling today because of, okay? The triple witching options expiration is a really big one, okay? There's all of these professionals out there that are managing these positions because the options expire today. And it's mostly going to push them towards 5,200. So that's a pretty strong flow that we can take and realize, right? And if we have a strong enough one, or, you know, a combination of flows all in the same direction, then we might be able to make a call that the flows are going to go one way or another. So let's just track this one. Let's not trade it. Let's just track it that we go short at 5,215. And our target is 5,200. So let's just write that in our notes here, okay? Short ES at 5,215. And we're going to say this happened at 7:11 my time, MST. Target is 5,200. Okay. And we want to exit before 8. Okay. 8 my time. 10 Eastern time, right? Okay. Because basically what we're doing by combining all that information together is we're taking advantage of informational asymmetry, an edge that can't be destroyed. They can't, just be arbitraged away. But can be unreliable because there could be all sorts of crazy things that could happen between now and then that would ruin it. But I did say 5,215. We're already 2 points in the green, right? We were getting a little bit of short order flow coming into it, so that kind of helped. Fulton County judge says District Attorney Fani Willis can continue to prosecute Trump's 2020 election interference case. Okay. That's in Georgia, right? That's the one where they already threw out a bunch of the things. Yep. I'm okay with that. I don't know. I really don't think, well, that case is probably the strongest of the three, but I don't think that they're going to get much from it. Like, I'm going to bet you that if they get some sort of a conviction, that it's going to be like on relatively trivial and technical charges. You know what I mean? But there's a lot of the charges that are being made there that are being made on kind of really shaky legal theory ground. So even if they did get it, it would probably go back to the Supreme Court, and I don't know if it would hold up. But whatever. Okay. So anyways, so that was that big long pontification that I gave there to basically to say, don't look for setups. Use the information that you know about the market. Look for asymmetrical information and try taking your trades based off of that. It's hard. because you really got to be informed, and being like informed enough about everything that's going on that day is super, super hard. But as retail traders, it's basically like our only choice, right? So if you haven't watched the whole order flow video series, I'd watch that. And that kind of, you know, gives you all that base information. I also have this one that's a one video that's more recent, that's like the important parts of a trading strategy. And basically I list out the like properties of like categories of market properties that like are proven that you can kind of use as the base for your strategy. But then there's also a PDF document. So if you go to speculatorseth.com/strategy.html and you put your email in, it will email you the PDF. I go into a lot more detail about, you know, what are the specific details in the order flow that we can kind of take advantage of, and what do those actually mean in practicality to us, so that you can kind of combine all of that information to create a strategy. Because it's a complicated thing. It's a very complicated thing. But if you just come in and do this exercise every day and say, okay, what are the things that I know coming in today that could potentially predict the future flows in my instrument? And then if you see a move or a flow that you don't anticipate, make some theories about what's causing it. Like, look for what that news was, or things that could be driving that flow for that day. And then, you know, you'll get more information that might help you confirm or deny that theory, rule out certain theories, things like that, right? If you do that every day, your brain, it's really amazing. The brain is an amazing thing. The frontal part of your brain is, you know, your frontal lobe rather. Your frontal lobe part of your brain, it takes information in, and it does all this machine learning magic that we don't understand, and just spits out answers. And so you come in and you're doing that day after day for years. Your brain just figures it out, and all of a sudden you're going to be coming in and you'll say, I want to go short today. And you'll hardly even have to think about it. Now, it'll still be rough. Like, your hit rate will probably still be like 50%. But with that framework, the ones that win should be able to run. So. And I would say order flow is a very, very important factor, because you don't really understand everything that's going on without it, you know? I have seen that sometimes I trade better if I just come to a day without any strategy and just trade what I see. Yeah. Well, because again, like, so if we take like the technical side of it, so let's look at the technical side of it, okay? Because one thing that we know happens is there are momentum effects, okay? Why does the momentum strategy work? Well, essentially what you're doing is you're creating a setup where anytime that momentum could potentially be starting, you're there and you're entering it. So most of the time momentum doesn't actually happen, but when it does happen, you make so much money that it cancels all of those smaller losses out. Okay. But in order to, make those big winners, you have to let them run for a really, really, really long time. Like weeks, months, years, even in some cases. Right? So that is kind of the thing that I think most retail traders are trying to take advantage of. But then you come down onto a daily basis and you try and do it, and it doesn't work. And why doesn't it work? Because you don't make enough from your winners, right? If you come in and you do that in, like the S&P 500, for instance, you'll probably do okay. But your winners will maybe be 5 times your losers. Whereas when you're doing this from a dailies, you're getting 10, 20 baggers instead, right? Big difference. So we come in and we're looking at things like, we touched this level and we bounced off of it and all of that sort of stuff, right? Meanwhile, there's some guy that needs to rebalance his fund for the end of the month, or he has to manage his portfolio going into the options expiration. That guy doesn't care that, what pattern you saw in your chart. He doesn't care. And he is so big, he has such a strong impact on the market that any of these technical setups that you're seeing are irrelevant. The only thing that matters is these guys that are executing, that are driving the flow at that time. Right? You see why setups on intraday basis don't really help you. They're just, you're basically you're shooting the broadside of a barn and then looking where most bullets hit and drawing a target there and saying, hey, look, see, here's my working strategy. Right? Why is it happening? It may just be random. It may be the psychology of people. And in either of those cases, if there really is an oddity there, people are going to notice and take advantage of it and remove it from the market. And, it's this teeny tiny thing, this teeny tiny flow relative to the options expiration, right? So if you are a retail day trader, that is, you don't have all the resources that the high frequency trading firms do and all of that sort of stuff. Okay. And you're day trading. That is, you want all of your trades to be short, in and out. You don't hold the position overnight, all that sort of stuff. It basically comes down to, I'm not going to say, because this is not a provable thing, but I would say in practice that essentially you have to be an informed trader in order to even stand a chance. Tyler McClellan on Twitter, don't know this guy, but he's being retweeted by somebody I follow, says, easy money is when someone even less deserving than you is getting rich. Jeez. Okay, so I'm thinking about this Social Security thing and the argument that I was having with Uzi about it. And I think that the issue I have is this whole thing that you have to retire at a certain age. I hate that. I'm paying for this service. I should be able to start using the service whenever I want. My usage of the service should be based on somewhat how much I put in and what my current age is. But if I want to retire at 50, I think that I should be able to. It's just I won't have paid in as much, so the benefit that I will get back out won't be as good. Right? That's the way that I would expect a private service like that to work to some extent, or that there would be private services out there that would allow me to do that. There are, rather. But the way that the government sets it up is basically they're trying to take as much money from you as possible and trying to avoid, trying to limit how much you actually get to take back out. And then what do? They borrow against it. And they use it for their purposes instead of yours. That's what bothers me about it. Like the thing that bothers me the most about the financial system today is that we've gotten really, really good at getting people to save and put money into the markets for retirement, but we put it behind these paywalls so that we can't actually take advantage of all of the great things that come with building wealth in that manner, right? Like you have hundreds of thousands of dollars in the stock market in your IRA, for instance, or your 401k, let's say, because a lot of people don't have IRA. You have hundreds of thousands of dollars in your 401k. Rich people, they will borrow against that. Is what they'll do. They'll borrow against that, and then you don't pay taxes on that because it's debts, right? You don't pay taxes on debts. You can't do that because it's locked behind this paywall. Total BS. That's basically like the financial and the political class stealing that power from you. And then on top of that, they've basically made it so that the only reasonable choice is to invest in index funds and not in individual companies. So now we don't even have a say in the way that public companies are run. It's another power that it's all just designed to enrich them and take power away from us. That's why it bothers me so much. And yeah, Social Security is a part of it. Like, Social Security does need to be a thing, right? Because people are stupid and they'll leave their grandparents in the street. It's just crazy, but that's what would happen. So there needs to be some sort of a system. But there's a lot of things about the way that the Social Security system is structured that I don't like. Okay, our footprint's good because they tell the numbers of orders that have gone through the market, and I thought it was a tool, and I tried to create a strategy, but finally it did not work. Well, so again, even with order flow, any kind of like setup that you're going to see is going to be like relatively trivial compared to, what's actually driving the flows that day. But a footprint chart is very, very useful to try and understand what's going on. How are you going to predict what's going to happen if you don't have an accurate picture of what the current situation is, right? So footprint chart is a way that you can see, what the market is actually doing on a historical basis, right? I don't use it very often because I'm just sitting here watching it and I can see that and I know what happened, whether there was absorption at that area or whatnot, right? But every once in a while, there might be something weird that happened overnight and I want to go in and see, and then I'll pull up a footprint chart, right? But for the most part, what most people try to do with footprint charts is they're looking for like unfinished highs and lows and in places where there's some sort of strange imbalance in the order flow at a specific price and that sort of a thing. And then they're trying to predict what's going to happen based off of that. And it's not that there's nothing to that. It's just that it's a relatively minor and trivial thing compared to the flows that actually really drive markets. So you look at that as the lay of the land, but then you want to know what are the future orders going to be. So, by the way, the trade that I mentioned went way past our target, didn't it? Right? It's actually, we made 15 points, and it has now gone almost 15 points past the target. right? Maybe, you know what? So I said, I don't know if this is one that this is not one that I'm going to take live because I didn't feel confident in it. The main reason why I don't feel confident in it is because it's the S&P 500 and it is random and it will just do random freak things a lot of the time. And I don't feel like I understand it very well. But like triple witching expiration were a little bit too high above a really round number. Easy trade. Easy trade. That one's actually, you know, very technical, actually, because it was like, there's a round number. We're above that. Well, it's very technical, but it's also very simple, right? Because I'm not saying, oh, well, you look at the swings and then you look for this type of a candlestick and you combine all of these things together and then you have, no. I was just like, we're going to rotate around 5,200 and we're too high. That was it, right? But triple witching expiration flows are really strong. Kind of makes it hard, you know, we're to the downside. I'm very skeptical that they can get too far today, because there is going to be that tendency for them to hedge and bring it back to 5,200. So let's see. I mean, every once in a while on an options expiration that breaks, and then when that breaks, they all have to go short, and you just get these insane sells. I don't think that that's going to happen this time, but it's always a possibility. Yeah, Octavia says short to evens. I think that's the trade that I should have taken in the treasuries for sure. I kind of felt like when we came in here that they started selling too quickly. So I think when I first looked at it, it was at 02. But how far did they come back? They came back to 05. So I guess if they, you know, if I was paying attention and I had caught the bounce, I could have gone short and caught that. Because I do like the idea that they're going to revert back. They're going to revert down towards that 110 area. And you combine that with yesterday was a big down day, so the momentum is short, and this, that, and the other. You know, these things that are listed here. Pretty good setup for sure. Now though that those targets have been hit, I don't know if I've got anything else. I should have taken I to be honest with you, I didn't plan on taking any trades today, but we should have taken one of those trades and then I'd be done. And, you know, we could shut the stream down and just go party for the weekend, right? That's the way to do it. Let me tell you something. The earlier you make the money, the better. Especially Fridays. Don't get yourself caught making trades like, you know, after 11 o'clock Eastern time on a Friday. Okay. The good traders, the ones that know what's going on, you know, they made all their moves early. They made their money and they're gone. The later on it gets, the less people are participating, and it's the people that lost. It's the people that lost and are trying to claw it back that are still trading, right? Don't be that guy. Which market should I start discretion trading with? Well, so you should trade the market that you have the most informational advantage in. If you are new and you don't know anything about financial markets and there doesn't seem to be a futures market that correlates to where you have knowledge, then I would go to the treasuries. Okay. Because there is a lot of public information about what's going on in the treasuries, and they have the largest flows. And so that gives you like the easiest place for a retail trader to try and sort out and figure out what those flows are. Okay. But for instance, if you worked for an oil company for years and years and years and years, then I would probably go towards trading oil futures. If I traded or if I worked for a copper mining company, right? If there was any kind of commodity that I would have the opportunity to like know stuff about, it'd be copper. Because in Utah, we have this massive, massive, massive copper mine. So I haven't worked there. I don't know anything about it. But maybe I had decided to go and work there. And so I knew a bunch of stuff about the operations there and what was going on in that industry. Then maybe I would have an advantage in copper. It seems like it's really hard to get information about some of those markets. I bet you that there's a news squawk. There's some research service out there that's specifically for copper. There's got to be. I don't know what it is, but it's got to be out there, right? Places for information. Sometimes the sources of information are just people in the industry, for sure. But that's where I want to go. Is where I have an advantage. And if I don't have an informational advantage anywhere, treasuries is probably the easiest place to develop that informational advantage, right? And the other one is equities. But equities is a different game. Or rather, equity index futures is a different game because there's so much randomness involved in it. To trade the S&P 500 based on an informational advantage, you have to be extremely selective and you have to be able to trade like really big stops. Because you're going to be able to come in here and make these calls that we're too low. The flows are all about to switch long. I want to buy here. And then you can catch these runs that just go on forever and make you tons, right? And then you're a genius. But you might have to sit through this huge drawdown before it happens. And the whole time, there's just going to be a ton of nonsense randomness happening all the time. Not for me. I can't handle it. A lot of people, what they do is they just try and, catch a little bit of that noise, which you can do for a while. But what tends to happen to those guys is when the markets turn bearish, they get destroyed. So if I was going to go that direction, I would probably rather trade individual stocks, right? So then the game is knowing all of the different companies, following all of the news with the different companies. It's a lot of research, right? I do a lot of reading and a lot of research on macro, right? Because I got to understand what the numbers are and how that's going to affect the treasuries and how that's going to affect the central bank decisions and currencies and all of those correlations. And that's what I got to do. But the equity guys, they've got to do all of that research about every individual stock every day, to have an idea about what's going to be moving and so forth. But that is a place where there is some information and there's so much complexity in it that you as a retail trader could potentially come in and find an edge in that. Yeah. ZT is the slowest account burn for noobs if you need staying power. Well, you just trade micro treasury yield futures, but yeah. I traded stocks with discretion and you made 10% in 3 months. Well, that's not bad. Although, if that happened in the last 6 to 9 months, so it's pretty favorable market, right? Was before that. Then you switch to Forex. Now Forex is the exact opposite. And that is exactly why I do not recommend Forex. Because a currency is probably the most difficult place for you to find that informational edge, right? Because you can know everything about that country and what's going on in that country and the macroeconomic factors that tend to influence it and the way that those flows might go. But guess what? There's some government insider that knows something about the market and he's allowed to trade it in Forex and he's going to trade it and you're not going to know anything about it. And those moves are just so massive that you just get destroyed. So it's very, very hard to have that edge in currencies. It's also very, very difficult to have that edge in Bitcoin. Because in Bitcoin, you're basically trying to predict what 10 rich guys are going to do. Like, that's really what Bitcoin is, right? If you're not in on that scam, okay? The way Bitcoin works, the guy that runs Tether, he's told us. He used to have a Discord room. They had a private Discord room with all of the big movers and shakers, and they would talk in that channel and discuss what they were about to do with each other and so forth, and kind of like plot with each other how to direct Bitcoin price in their favor. He says that most of them disappeared because FTX died, but okay, like that's what they're doing. So you're trying to predict the mind of like 10 rich guys. How are you going to do that? I don't think you can. And again, when they come in and move it, it moves it so far that if you're on the wrong side of that, it's just going to blow your account right then and there. And so that's why I don't recommend day trading Bitcoin. Seth, what timeout do you use for the market buy and sell columns? I just use the default. At least here in the treasuries, I use the default. 2,500. I know some people like to have it really, really high, but I don't really find that necessary. Yeah, 2.5 seconds. 2.5 seconds. You know, I like to see it every time that it ticks up. How many contracts did it take? Right. And I can do things like watch the volume profile and things like that to kind of keep track of like how much did it trade there over the long haul. I tried zero. No, I don't think zero would be. Zero would keep it forever, wouldn't it? It's really hard on indices. Yeah. Well, like I was saying, okay, so again, if I'm over here in the treasury, hey, there's been a lot of research on this about like where does price action originate and so forth. And in the treasury market, it happens primarily in the futures and the options on the futures. I should probably be watching order flow with the options on the futures, but I have access to that data. The actual futures does good enough. Okay. When you come over to the S&P 500, where is it originating? Well, like there's 500 different stocks that are all doing something that could potentially cause the action, right? 7 stocks in particular that are basically like all of the winnings. So a piece of news coming out for any one of those 7 stocks or something that affects any 7 of those stocks is going to move the index, right? It's a complicated thing. It's a complicated thing. So then you got these guys over here in the futures, and what are they doing? Well, I would say that the biggest players are just hedging portfolios. They're just saying, well, you know, we're concerned that it could move down and so we want to hedge the portfolio, or we're going to have some money to invest in the future, but we don't have it yet and we don't want to miss out on this move. So, but we can afford to buy the futures. So we're going to buy the futures and use that leverage, for instance, right? That's what's going on over here. And so the flows in the equities index futures, it requires a lot more nuance to interpret, because I have to come in and say, okay, well, I saw this sell here and this buy here, or like we moved down, but I was seeing buying the whole way. Why is that? Well, they must be hedging because of X reason, yada, 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 right? But it's really complicated. And so your order flow is still just as important of a component of understanding a trade over here in the equity index futures. But like there's so much more that you have to factor in to correctly interpret it, right? Or let me give you another example. When I come over here into the treasuries, like yesterday, we had a move where we moved down quite aggressively. There was pretty high volume on the move down, but there was not a significant change in cumulative delta. So the net number of contracts that were required for us to tick down was unusually low. Well, why is that? Well, my theory is that it's from the flows in the Japanese yen that were causing us to sell off, right? So when it's the correlated instrument that's moving, you're going to see the volume and the cumulative delta change in that correlated asset, and your asset, it's just trading on a correlation. So the robots are just adjusting their bid and offer based on that correlated asset. And that's why it's able to move more easily. That's why it's able to move down on less volume. It's because it's the market makers moving it, just adjusting their bids rather than big sellers coming in and taking up liquidity and pushing us down, right? So I have to watch the correlated assets, namely the dollar and the Japanese yen, to help me interpret the order flow that I'm seeing, right? In the treasuries, that's like the biggest, most major thing that I have to factor in, right? In equities, there are countless things that you have to factor in. You have to factor in the options on the futures. You have to factor in like the gamma and all of those sorts of things. You have to factor in the different hedging of things going on in individual stocks. Equity index futures are a very advanced instrument, and the professionals do not like trading them. They leave that to like the HFT. They call like when I talk to the guys on a desk, they called ES crack. They said it's like cocaine for traders because it moves so much you just get addicted to it, but it's like you can't control it. Yeah, indexes are really hard to trade, man. Sounds about right. Which is funny why they're so popular. This is funny why they're so popular. I mean, of course they're going to be popular because like they have the most profit potential. Like that's the advantage, right? S&P 500 futures or NASDAQ futures have the greatest profit potential. If you hit it over there, you make money. You make big amounts, right? Whereas if you have an edge over here, you're just making a tick or two every day and it's not a big deal. So that's why the retail traders gravitate towards the ES. But if our goal was, we want to have a positive expectancy, because listen, retail trading is hard. Most people are going to just lose everything that they put into it, okay? So first goal should be just break even. We want the overall expectancy, and let's say for the sake of argument, because you're a small trader and all of that you're not factoring in like the fees and the data and all of that, okay? So just net your trades, break even, for instance, okay? If that was your goal, Treasury is most likely place to find that. Treasury is most likely place for a retail trader to be able to develop the skills and achieve that. So really, Treasury should be the most popular, but everybody's chasing that dream. About that DOM I was working on, it's fully working except for placing orders on the DOM. You ended up using CTS, but doesn't CTS have its own DOM that's pretty okay? Trader Lord Vader. That's funny. That's a funny name, dude. European bonds? That's a good place to, yeah. But European bonds are kind of weird because they're priced differently, but I don't get that data, so I've never really messed with them, but I would be super interested if I, could get the data cheap to do that. You know what? I like my long-term, like one of my long-term dreams would be will we ever get China bonds? That would be an interesting game, wouldn't it? Smitty says, I hate it. I'm sorry. What, you hate CTS or you hate their DOM? Yours is faster. Well, that maybe doesn't surprise me. So wait, what did you write it in? Oh, it has to be C#, doesn't it? Gotcha. I don't know, like making a DOM that is performant in C# is actually deceptively complicated. C# is a deceptively complicated programming language. How low do you think the price will go? That's a good question. So here's how I would probably try and approach that question. Okay. Let me come over here to TradingView. And we're going to pull up ES. So of course I have ES futures data over here. And I could, I have this right here, right? So why aren't we just using this? Well, the thing that I don't get is the VIX. So let's add the VIX over here. Volatility, the S&P 500, new pane, right here. Okay, so here we can see the VIX. VIX is rising here this morning as we're falling down, which is the way that the VIX tends to go, right? Okay. So the VIX is essentially a measure of like buys and calls and so forth. And essentially what it tells you is how far the market expects the market to be able to move in the future. So we can take the VIX and divide it by a number and basically come to like a daily range sort of a thing. Okay. So what I'm going to do is I'm going to put this to a 30-minute chart, and then I'm going to find this indicator, and it is called VIX range estimates. I swear that there's more people that use it than that. Read more. You can find it here. It says only 2, but I know way more people used to get done. Oh, actually, you know what? I take that back. There was another version that got removed. That's what it was. Anyways, I got this thing right here. Okay. So what this does is this is drawing lines to basically estimate how far it's going to go. This is 1 deviation and this is 2 deviations. Okay. So based on what we're getting right there, a move below 51.65 or so would be kind of unusual, essentially, is what that's saying. Okay. So you can see, just as an example right here, this day on the 7th is a good example. Where is my pen? In case you can't see it very well, this is where it opened at. This is the first deviation. And you see, they just kind of kissed that line, and then that was as far as they could go, right? So, utilizing that, it's kind of saying, well, it's saying that we opened up at 580, right? And then the first one up is 5209, and the first one down is 5163. Okay. So I would utilize volatility essentially to make an estimate about how far S&P 500 could go for this day. This is one way of going about it. Now, granted, we already kind of came before the open, so I'm kind of thinking that there could be a little bit of a wash through 5180, but I think it will be hard for them to go much lower than that. Most of the time was spent getting state price column working. Well, so can you open? I could, but I don't like to. What do you want to see? Octavius got out. I would have thought it would have been out earlier, but it was a good trade. Wait, what price? I never asked. What price did you get in? Thank you for the thought. No problem. My pleasure. I made a video about this. It's an older video, but there is a video about this, about how to use volatility to protect the range of the day. Of course, there's these outliers where, it'll bust through that. Those happen, but it's a pretty good guide for most days. Especially a day like today, where it's the biggest thing that's going on is the options expiration, right? I'm gonna close that one. So I think the place where you're gonna find where you start to see problems is like when you have 8 DOMs up and they're all updating, and then you go and you look at your CPU and your memory and you're like, oh no. Can you tell me more about how to trade the treasury? It's the 10 and 5-year bonds. Yes. Okay, so let me show you why I have my setup the way that I do. Oh, 025? That's not too bad. That was 5 ticks. That's a good trade. Like 4 or 5 ticks on the treasury is a decent trade, I think. Less than that, I kind of like start to question if it's worth it. But so I have here the 30-year bond, the 10-year bond, and the 5-year bond. But I'm primarily trading the 10-year. And I trade it down in here on the yields because I don't like taking a whole lot of risk. I do it over here. I probably could have taken a trade, probably could have made $15 or something like that today. But I don't know what my problem is. I need to focus. I need to take more trades because I've been missing a couple of good ones. Okay, so I'll take them over here. But I need to see what's going on in the whole curve, right? Like, look at this. You see we've moved yay ticks down in the 10-year, but we've moved slightly more ticks down in the 5-year. Curious. Yeah. So that's flattening. I don't know when I reset this, because when I look at the spread, well, okay, so then I come back over here. Like, here's the 10-year. This right here is the spread. Okay, so if we're flattening, that means it goes down, right? Come back over here. Flattening means it goes down, right? So flattening means sell the front month, buy the back month. That's what flattening means. Okay. So the opposite if you're thinking about yields, but we think about it in terms of prices. So just memorize that. Flat is sell the front month. Steep is buy the front month. And you can just think of it as flat is down, up is steep. Okay. So now that I know they're selling the front month and they're buying the back month because this is a flattener. Okay. Now I can kind of think about that when I'm interpreting the flows that I'm seeing here. Okay. So if they're selling the front month, I should expect to see a lot of market selling over here in the 5-year. And we kind of are, right? And if they do buy up in here, there's going to be really big icebergs absorbing the contracts, right? Because the spread is sell the front month, buy the back month, right? Now, interestingly enough, in the treasuries right now, there was a really, really big... Oh, okay, so we're getting close to... Because consumer sentiment. I was going to say there's a big, if it is by the back month, right? Then that might be why you see this big iceberg right there. So I kind of have to, that iceberg is not as meaningful to me as it normally would be because it's probably part of a spread trade. Make sense? But the real thing is, what is University of Michigan sentiment going to be? That's probably the only thing that matters. And here we got 10 seconds. And especially that 1 in 5 year inflation preliminary. Okay. So the headline number is slightly lower than expected. Oh, actually, it all looks pretty good. 1 year inflation is 3 versus expected 3.1. And that's in line with the previous reading of 3%. And the 5 year inflation is 2.9% versus the expectation and previous reading of 2.9%. But the headline number was 76.5 versus an expected 77.1. So that was slightly lower than forecast. I would say overall that's a pretty positive report. That would cause treasuries to buy, but I'm not seeing a whole lot of flow doing that yet. So do you see how it goes? So I'm just going through, okay, what was the expectation? What was the actual number? What were the flows that I saw going into it? The flows that I saw going into it was selling in the treasuries, right? Okay. So based on all of that, what would I expect the flows to be? I would expect the flows to be buy. Are we actually seeing that buying flow? Well, we did move up, but I'm not seeing a huge change in cumulative delta. So does that mean that the market doesn't care so much about it? I think maybe. I think we have to give it a little bit more time to see if that's actually the case. But I think that what's happening here is there was that news. There's a short little knee-jerk reaction to it, but that really what matters today is the options expiration quad witching. Yep. Or triple witching or whatever it is. I thought it was quad witching. Let's see here. It's the equity options expire. The equity index futures options expire. And then you've got monthly and quarterly. I don't know. I thought that there was 4 of them. Quadruple witching. Yeah, there you go. Quadruple witching experience refers to the simultaneous expiration 4 times a year of stock options, index futures, and index futures options derivative contracts. The 4th type of contract involved in quadruple witching, single stock futures, hasn't traded in the US since 2020 and was never a major contributor to equity trading volumes. Oh, really? So it is effectively a triple witching. I did not know that. I'm actually surprised that that is not something I have ever come into. That's funny. Okay, so it is a triple witching, but sometimes they call it a quad witching because history. That's funny. Okay, back a tick or two, but nothing significant. I am going to reset the volume in here because I want to get an idea of how far they've moved after that kind of. Yeah, I think you're right, Trader Lord Vader. I think you won that one. You're right. We should call it a triple witching. That's not bad. First day here, and you beat me at something. That's pretty good. I don't know if that one's not so common. Or rather that you got me to admit that. Right? Man. Okay, so I want to come back here real quick. And just kind of take a poke around to see if there's anything that I missed. Okay, so the top story on Zero Hedge is about The Fulton DA being told she can stay on the Trump case if the lover pulls out. Oh, that's funny. The terminology that they use there. Which platform should you chart with? Well, it doesn't matter much. So I really like Jigsaw, I execute with Jigsaw. Okay. That's my favorite platform. There's a couple of little things missing that I'm hoping that they get in the future. You can't make custom charts, right? NinjaTrader has pretty good charts, and they have an amazing ecosystem because it's C#, and C# is a really great language to program with on Windows. So you got a really huge library of indicators and stuff that you can get from people, right? So NinjaTrader, it's mostly about the ecosystem. Now you can do charts with TradingView. I always kind of felt that TradingView had the best charts overall, and they have PineScript, which is not as great to program with, but because it's so popular overall, there is a huge library. It's just that they're not very suited to futures. Okay, so if I was going to do stocks, probably either TradingView or Thinkorswim, right? But if I'm doing futures, probably best NinjaTrader. Now, there's also Sierra charts. This is what Trader Lord Vader says. So Sierra charts is written in C++, which is very difficult to, well, I don't know if it's very difficult, but among programming languages, it's one of the most difficult to program in. And so there aren't nearly as many indicators for them. And the indicators can have memory holes and problems and things like that. But Sierra charts ends up being very performant. So that's the issue that's kind of the thing with that one. Sierra charts, I think, is attractive to a lot of people because it's a little bit cheaper than some of the other platforms like Jigsaw. But when you actually go down through the way that they have their setup, where you have to pay for their data and everything else, what you're actually paying, it's actually pretty comparable to all the other platforms. But if you really now the thing that also is really good about Sierra charts is that it has really good charts and it has a pretty decent DOM. So that's the only place I can think of where I really feel like you get the best of both worlds. Whereas for my setup, I have to use Jigsaw and NinjaTrader together to get the setup that I have. You just switched from Sierra to Ninja plus Jigsaw, and it was the best decision for the DOM? Yeah, it is. I mean, Sierra Charts has a lot of features in their DOM and everything, mostly features stolen from Jigsaw. But I still don't think that it holds a candle to the Jigsaw DOM. Oh, so I missed Stop Crying Nub's question about, I'm new here and I'm curious, how do you really need a DOM? It's a good question. So, and to be honest with you, depending on what you're doing, you might not actually need the DOM. But if you want to trade on a very short time frame, I think that it's a very, very critical part of the trading. And why is that? Well, you need to have some idea of what the liquidity is. So let's just go back and review, because if you're not familiar with the DOM, you might not understand how the order book actually works. And this is an important thing to understand because this is the very minute, simplest basis of the market. And there are so many interesting and fascinating statistical properties that come about as a consequence of this. Okay, you can place limit order or a market order. Okay, so if I put a limit order out there, I will join one of these queues. So this blue column and this red column, those are limit orders. Those are people with orders sitting out there waiting to get filled. Okay, now I can add limit orders or I can cancel them too. Sometimes they will cancel their limit order just before it gets filled because they change their mind and decide, actually, no, because of what just happened, I don't want to take that trade, right? Okay. Those limit orders will be matched against market orders. There are some like niche cases where like you both put in a market order or a limit order at the same time and you can get matched against each other. But for the most part, a limit order to buy is going to be matched up against a market order to sell and vice versa. Okay. So that kind of determines where we go. The more orders there are at a price, the more sell orders are going to have to come through in order to get through that price. So there are some things that I can kind of look at. So usually there's going to be a lot of orders at an even number. But then, you know, like we've got a target right here just below where we've traded, which is kind of curious. It looks like 31 has actually gone offer at one point, which is why the 30 half there is white, but they didn't trade 30. And so there's like more liquidity there because that was the lowest price to get bid. So you can always expect that one. But then there's this big one down here at 27. Okay. So those are each kind of spots where like we're going to come down and we might trade there for a little while and we kind of, you know, that's the tendency that you're going to see. But you have to watch it as it trades. And this is why these columns here in the middle for Jigsaw are really important. Okay, because those are the market orders. And that this little column here in the middle, it resets. So if I trade into it and I trade down and it's been more than 2.5 seconds and it comes back up, that resets back to 0. So basically it tells me each time how many contracts it took to clear that price, which is useful because, you know, they're going to trade it there over and over and over and over again. And what will happen is you will start to get these prices where a lot will have traded. And the market makers, like everybody that wanted to get filled in that area, has already been filled. It's not really happening right now. I was hoping to try and catch an example of it right now, but it's not happening super strong. But basically, you get this price where like there's less than 1,000 contracts bid or offered. When they tick up, a lot of those contracts trade, and it doesn't take a whole lot for it to tick up. But then they don't put up a strong bid either. And it just goes back and forth there. Now, what can happen is you actually end up trading a lot there, and that often becomes these point of control prices, right? But it happens over a long period of time because that's like low latent liquidity. Basically, price tends to settle where supply and demand are at their minimum. So you got this area where the liquidity is at its minimum. And then if you trade above or below that, there's all of this liquidity that you have to get through. And so it's hard for them to push through that. So you just get stuck. You just go like this. Right? And one of the things that's so great about the treasuries is that this behavior becomes really, really obvious once you understand that once you know to look for it. Right? It's like, how can you get this thing where like we're trending down and then it just gets stuck in like this 2-tick range for forever? Why does that happen? That's the low latent liquidity right there. That's the price that they're just kind of ticking back and forth and there's not a lot of liquidity on. And then eventually they did decide to move down. And then there was news, but I digress. Okay. So with all of those sorts of things in mind, now I can kind of use that together with the things that I think are going to predict future orders. So, for instance, quad witching. I think that we're going to move towards 110 even because of the options expiration. Well, this is really a very good example. I think that the trades that we had are already done and passed. But there was a point when we were up here and you could have said, okay, we're going to go down here. And here are these places where like, okay, we've moved down. There's a liquidity hole. I know that we're probably going to be stuck here for like 30 to 45 minutes. But I think that there's still orders to sell and we're still above the price. And so I can hang on through that liquidity hole. versus right now, we've touched it. Maybe we're forming a liquidity hole at O2. It may be starting to take hold. Doesn't really make sense for me to take a trade right now because I'm going to get in a trade and it's going to be the same price 30 minutes from now. So what's the point, right? So do you see? It's like, okay, these are not things that predict what's going to happen, that like give you like a set setup, but they do tell you useful things that can help you reduce your risk and time your trades and all of that. In this case, I think it's mostly about how to either time your trades or when to take profits, right? Because it's like, well, it came down, like we had a really big move down, and now there's a liquidity hole. Usually it's done. Or it's been more than 45 minutes. Like if there's a hole and it's been more than 45 minutes and you don't see a second leg, it's probably done in the treasuries. No reason to trade it, right? Now, if you go to speculatorseth.com/strategy.html, I have a PDF document where I kind of go into these things in a little bit more detail. I discuss all of the empirical properties of order flow that we know about and how you can use those things to help you. I'm not giving you like setups, but it is information that you can kind of use to game out how you take your trades. Ultimately, though, to have a good trade, you need to have some sort of informational asymmetry, like something that you know about the possible flows that day that the market isn't taking into account. That's where the real profits come from. If you make money on an intraday basis, it's basically because you predicted the future orders, right? Because it's the orders that cause it to move, right? In order for us to move out, the market order buys have to overwhelm the limit order sells and vice versa. Yes, let me just type it out here. speculatorseth.com/strategy.html. And you sign up for a mailing list and it emails it to you. I've never sent anybody anything with the mailing list yet, but maybe in the future we'll, like if my indicators have an update, I might send out a message on the mailing list for that, for instance. So yeah, I have that order flow video series, and that kind of goes into all these things too in a lot more detail. Especially like those last 2 or 3 videos. So the first bit of the thing is just helping you understand like what you're actually looking at, right? I don't know. It's kind of funny because as I'm sitting here talking, I kind of feel like I'm a little bit all over the place just because I'm trying to give you so much information all at once. But really, I felt like I did a really good job with that order flow video series. Because what happened was I was like, okay, I'm just going to, here's everything that they need to know about order flow. I'm just going to put it all in one video. And when I started typing it out and it was like 10 pages and I was like, oh, I think that we have to split this up. Right. But I think that it's pretty clear and concise and gives you what you need to know. And by the time you're done watching that whole series, you're going to understand it, right? Like when you're done watching that series, it should be like you can see the matrix. Like you do that and you start looking at the DOM every day. And after a few months, you can see the matrix. Seeing the matrix doesn't necessarily predict what's going to happen, but at least you understand what is happening right now, why it might be doing what it is, and how that's happening, and etc., etc., etc. Okay, is it worth getting the Jigsaw education program? So when it comes to educational materials, worth it is like very subjective. You could take the perspective of, okay, if I do these training material and I make X amount of money from it, was the amount of money that I made from it more than the amount of money that I paid for the education. And in the case of day trading, the answer is almost always going to be no, because most day traders do fail. What we're trying to do is extremely difficult. You got to understand, it's extremely difficult. What I've described is a very complicated system that takes, years of experience and a lot of research, understanding about the current market to really pull off well. And I don't pull it off well all the time either, right? Like I totally stunk in January, man. It was terrible. I digress. So you can't take it from that perspective, right? But the perspective that you can't take it from is like, okay, is the information that they're providing accurate? The information that is provided in the Jigsaw Education series is accurate for the most part. I would say yes. Okay. Is it information that you could find on your own? I would say overall it's pretty difficult. So you are saving yourself time by doing the Jigsaw Education. Okay. But really, it kind of depends on like how much money you have and how much you care and what you're willing to put into it as to whether or not it's worth it for you, right? For the majority of people, the education that comes with the platform, so there's like 3 different editions, and the difference between the different editions for Jigsaw is the education that you get, right? 90% of, because I have an affiliate link in the video description, and I can see when you guys use the affiliate link, okay? 90% of you guys buy the standard edition, and that's what I would recommend. Okay, I would do the standard edition, watch my order flow video series, watch the order flow for a year. If you get done after a year and you still don't feel like you understand what's going on, then maybe think about the other education, the additional education. The top level one, like the institutional order flow one, that's like most retail traders, that doesn't make sense to buy that one. Right? That's the one for, like it is an institution and, they can just spend as much money as they want because it doesn't matter. $1,000 is nothing to them. So that's what I would say about education, right? I would just buy the standard edition Jigsaw, watch my videos, watch that. Now, if there was education that I think is worth buying, it's the No BS Day Trading Guide, because it's only like $90 and it's just a good book. I really like that one. I think some people, look at it as like, oh, here's some setups and I'm gonna start trading those setups, and that don't go down that road. Okay, so you have to understand the context. He's just describing what you're gonna see happen. He doesn't. He's kind of saying over time you'll kind of understand when to use which one or why this one should be happening or that sort of a thing, right? What I've done is I've kind of created a framework utilizing the empirical information out there to help you understand that sort of a thing. Now I know, based on all of these different things, what the flows for that day should be. So now when I see an iceberg in this particular place, I can put it into context to understand, okay, well, there should be a trader out there trading this today. Why might he be using an iceberg in this situation? And does that make it good sense for me to buy here or not, etc., right? Okay, let me read back here. So you've seen my name yesterday. What are we talking about, Andre? I'm glad that you're here like almost every day, Andre. We appreciate you. Sierra chart with delayed data is pretty. Oh, is it? I know. So when it comes to platforms, okay, Jigsaw, it's like $500 to buy the platform, and then for live trading, it's $50 a month. Okay. That is pretty steep for most people, but it's actually like a lot of them come out to a similar sort of price. Like if you do Sierra charts, there's no upfront cost, but the monthly cost that you pay to have like the, you know, if you're getting the version that has all of the order flow and the DOM features in it, you're paying like $47 a month or something like that. So the monthly fee is pretty close, right? So yeah, trading futures is not free, unfortunately. So, but if you come in, you can spend $500 on the platform, right? Put like $1,000 down into an account, and then just trade that sim. And it's usually you pay about $30 a month for the data, and that will come out of the account. And then the fee, well, if you're just trading sim, then you're not going to pay the monthly fee, right? But I pay the $50 every month, right? But I just treat that as a subscription. I treat that as like, you know, it's a cable subscription. And Jigsaw has a really good simulator. Actually, if you're having success on the Jigsaw simulator, on the tenure, if you're doing well on the tenure and the Jigsaw simulator, then really good applicability over to life, because the Jigsaw simulator is actually more stingy than the fills in real life. If it's a really illiquid instrument, it's a little bit different because your orders are going to have a bit more impact in that instance, and so there's no way for you to factor in how the market might be different because you traded. I know that sounds silly, but again, orders have strong impact, so there are absolutely some situations where the short-term direction of that instrument is different merely because of you. That can happen. We had some, like a time machine, and we could go and change, you know, and test. If I bought, does it go this way? And if I sell, does it go, you know? There would be some niche situations where they're different. Does it show your orders in the book? Like, yeah. So, like, wait, what are we talking about? In the Jigsaw simulator, if you put an order out here, because this is a sim. This DOM I have set to sim right now. You can tell because you see at the top it says ZNM24. That's the instrument that I'm trading, and then it says -S star 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 star. That's trying to hide the account number, but I let you see the first letter, and that's my serious account is what I call it. So that's a sim account, but it's for more serious trades. Whereas if I'm just dinking around or I'm trying to show you something, I change it to experimentation, and then you see it says experiment, but then the last bit of it. Whereas if I was doing my live one, it's this, and you'll see a 7. Okay, but this is a sim, and you can see it says it estimates where I am in the queue. And like I said, their estimate is a little bit more stingy than real life. So it's a good sim. I've seen some sims where, like, you know, if you put an order somewhere and it goes away from it and then comes back to it, like if any orders trade there, it assumes that you're at the front of the queue and you get filled, which is just nonsense. So, but you know, we were talking about this the other day, and like one of the ideas with this channel is, hey, you don't need to do any of that. Just watch the videos. Come in every day. At your leisure, watch the stream, listen to me talk. I know that, like, listening to me talk for 3 hours a day might be a little bit grating, but you kind of need that part so that you're catching in, like, what is the breaking news and the things that are happening that day, right? And then you just watch the order flow, and you can gain the experience that way without ever having to spend a dime. And you can even come in and say, okay, what if I take a trade here? And you're just going to have to keep track of it all by hand, right? But, you know, that's a way to gain experience without spending any money. And then when you feel confident and you've saved up a few $1,000s, then you can go and you can graduate the sim. So it's another way to do it without investing any money. Because, like, you know, another part of the stream, I think, I'm here day trading, gaining that experience, gaining that insight into the markets that you can have from watching it play out tick by tick, so that other people don't have to. Because, like, honestly, most people are going to lose money from day trading. And so it's like you're dumping a ton of effort and work into something that is, in all likelihood, never going to make you any money, right? Well, my situation is unique. First of all, I absolutely just love it. I'm totally willing to wake up at 5:30 every day and trade for 3 hours before my day job. Excuse me. I'm extremely secure with my job and everything else. So good the situation with my wife taking care of the kids and stuff, so that I can do this. And so other people that don't have that same life situation that would be optimal for trading futures, right? They can still gain all of that insight and everything from watching me instead of doing it themselves and putting their own money on their line. That's part of the idea of doing the stream. In your opinion, what would be the minimum columns to create for reading order flow on the DOM? I think I would say the ones that I have up there. I would have a hard time trading with anything less than the columns that I have. I don't use LTQ. I know a lot of you guys, they love LTQ, but I've never gotten a clear answer on, can we show an empirical behavior about LTQ that it actually does show you something? So who knows? But yeah, you have to be able to see the bids and offers, and you need to be able to see the market orders. You could, with the volume profile, it used to be that you just had to watch the volume profile, and as the numbers over here changed to judge, what was buy and sell and stuff like that. Now Jigsaw, they split it out into these two columns that like reset and everything. That's super useful. I mean, you could trade with the volume profile, but that would be super, super hard. That would be a super hard skill to develop. But what we've got on here, limit buy, limit sell, market buy, market sell, price, and then overall volume for the session. I think that's most of what you need. And then for me, the other thing that I do need is like a cumulative delta. So when you come over here on the treasuries, I have a cumulative delta chart because I have a hard time keeping track of and remembering, because this is basically market buys minus market sells. So when we're getting a good trade, I want to see a persistent imbalance between market buys and market sells in one direction. Yeah, what about the stacking and pulling columns? I never found them that useful, to be honest with you. I just didn't, when I had them up, I just didn't pay attention to them. So I got rid of them to give myself a little bit more space. So I'm not saying that they're useless. It's just that I personally didn't need them. I think of the stacking and pulling column as like, okay, if I have a hard time remembering what was the DOM look like, 2 or 3 prices away from the current price, and when we tick up, did these change significantly? If I had a hard time keeping track of that, then putting that up would maybe help. But I don't think it's necessary. Why don't you become a full-time trader? So, number one, the amount of money that I'm making here, because I'm literally risking like $10, $20 a day, right? And I'll have bad drawdowns too. Okay, so I'm not making massive amounts of money from doing this, okay? My approach is more of a hobbyist. That's the honest to goodness truth. I don't put myself out there, because I tell you what, you guys are asking me a lot of questions. I'm doing a lot of teaching today. I am not able to come out and teach with this level of confidence because I've made millions and millions of dollars in futures trading and, have all of this huge profits to back it up. Okay. Even if I had I've never made $1 million from it, but even if I had made $1 million from it, I wouldn't feel confident in that, because past performance is not indicative of future results. Like, you could have just been lucky, right? The reason that I'm able to tell you all of these things with such confidence is because there is very strong evidence-backed research, empirically backed research about this stuff. And that's what I'm teaching you. The thing that's unique about me is that I had enough experience at a bank to kind of know how those things would go and know where to go and find the research and understand the research, and then translate it into something that the average person can understand. But like, how is it relevant to you? Because there are books and stuff out there about it, but they are all for institutions and, you know, big guys, and they don't understand how it might be potentially relevant to you. So that's really the only special thing about me. So I understand the research and how it's pertinent to you. That's it. So one is, yeah, I like to keep small risk. Trying to live off of my trading sounds like a nightmare, to be honest with you. Trying to live off of day trading sounds like a nightmare. That'd be so stressful. Living off of trading other people's money on like a higher time frame, that sounds like a good gig. I would like to do that. And I've done some things to move in that direction, but I would need other people's money. I don't know where to find that. Right. So that's why I haven't done it there. But then the other and the real answer is that by day I'm a site reliability engineer. I'm really good at it, I think. I really enjoy it, and it pays so well. And it just would not make sense for me to switch over to day trading to make less than what I make doing site reliability engineering and like having more stress, you know? So I don't think that I'm ever going to become a full-time trader from YouTube. There was a time where we talked about like, oh, I would love to make enough money just from the YouTube channel to switch over to doing the YouTube channel full-time. And to some extent, that still appeals to me. But another side of me says, you know, your whole living being dependent on how well your next YouTube video does also sounds like a nightmare to me, right? So I think I've come to the conclusion that whatever happens with the channel, that I'm just going to keep doing what I'm doing. Keep my size relatively small, do the stream every day, make YouTube videos, still have a day job. And if I make tons and tons of crazy amounts of money trading futures or from the YouTube channel, I'm just going to pack it away. I'm just going to save it. Octavia says, I look for top 5, look for pulling across the whole strip. Yeah. It's funny because I think that that's actually what I look for too. Is like, if we tick up and I see that like orders pulled like the whole way up, that's when I start paying attention to that sort of a thing. It's very rare that happens though. It happens when like we're like in a pretty good downtrend and then like it pulls back. And then that's kind of like the pivot. Like it doesn't necessarily reverts, but like maybe it kind of starts to go sideways. You'll see like some significant change in the liquidity. But I can just see that out of the corner of my eye. It's like, I don't even look at the numbers. It's almost like I can hear it. You know, it's like an audio sensory sort of a thing that it like ticks up and you can just kind of feel it go like, whoop. Oh, okay, that was a significant tick. But not everybody's going to be like that. Okay, I know you talked about prop firms quite some time, but why not go for 25k eval with like $20 after discount and day trade that for a bit? So the problem with the prop accounts is with the way that I trade, you have to probably trade 2 or 3 months to meet the targets and stuff. So I really don't think that the combines make much sense. Like, the thing that bothers me about the combines is that the whole system is designed to encourage you to make risky plays, essentially. They want the hot hand. They want the hot hand, and if you're not the hot hand, then they're not interested anymore. Whereas I want to just be consistently good day in and day out. And to be consistently good day in and day out, you know, that does mean that you're going to make less on a daily basis, right? And so the numbers for the prop firms don't work out. If I was going to get a prop fund account and like I don't see myself putting any money on that, I just doesn't really interest me. But you know, if a prop firm came to me and said, "Hey, we're trying to do this, we're trying to promote this new thing," or you know, because this has happened before, then I would go, "Oh yeah, sure, we'll trade an account this month. You give me a free account, I'll trade it," and I would try and do something unique with that. I would try and, you know, do a strategy that's doing something kind of degenerate to show you that you can pass funded accounts with pretty degenerate strategies, but strategies that aren't necessarily good in the long run, right? That's the only way I see myself trading a prop account. Can you say more about the thing you mentioned before? I took the prop firm to teach myself patience and not chasing trades, and it helped a lot with seeing how I can hit the max drawdown easily. Yeah. Well, so here's my challenge to you. Have your max loss for the day be 1%. Like you could give yourself a big chunk of change to make it easy. Okay, let's say that you had $100,000 portfolio. Okay, that means that the maximum that you're allowed to lose on any one day is $1,000. You hit $1,000, you stop. When you realize how small you have to trade to keep your max loss to $1,000. And by the way, there was a Forex funded trader company. They said that they admitted that most of their funded traders do not last very long. The ones that they've had for years and years, they don't have a max loss of more than $1,000. That was the thing that they identified as like the guys that stuck around, why they stuck around. Okay. But once you realize, you know, what size you have to trade to keep it to $1,000 with $100,000 portfolio, then you realize how risky most futures traders are really trading. Because, like, think about it. Yesterday was a $500 move. Yesterday was more than it was probably like a $700 or $800 move. So like 130% of your margin requirement. Let's just say that you had $1,000 account and you're trading one contract, because that's what a lot of retail traders will be doing in the treasuries. And you're trading ZN, right? You're literally talking about making like 50-60% in one day, or losing 50-60% in one day. It's actually crazy. And they're saying you should keep it to 1%. Okay, well, if you're going to keep it to 1%, then trade micro treasury futures, right? You have a portfolio of 1,000, you make or lose $10. You trade small. You're probably never going to make a living, you know, you're probably never going to be a full-time trader doing that. But again, I'm kind of trying to get you to question the goal, because I think most people, they come into this and they think, you know, I don't like my day job. I want that financial independence. Day trading might be the way for me to find that financial independence. Nah, it's not a good way. It's kind of crazy. Like, why would you want your next meal to be dependent on whether or not this random line goes up or down? You really need that in your life? I think that there are better ways to live. I say you do it as a hobby and maybe you get lucky. Maybe you're one of that 1 in 1,000 that does really well with it, right? But you don't heap all of your hopes and dreams on that. Okay, can you explain the correct way to read the recent bids and ask columns on a dump? Okay, so generally speaking, let me start over. Okay, there are 6 forces, 6 fundamental forces. There's the limit orders, buy and sell. There's the market orders, buy and sell. And the 5th and 6th are limit orders canceling. Okay? So limit orders being added, limit orders being canceled, and then market orders. And that's 6. We need to factor in buy and sell. Right. Okay. So market order buy in general going to cause the market to move up. Limit order buy, that being added in general, has tendency to make the market move up, or at the very least makes it more difficult for the market to move down. Okay. Limit order canceling reverses that. So a limit sell canceling will make it easier for them to move up. Okay. So that's just, there are 6 forces, and here are how these forces tend to have an impact on the instrument. Okay. So now we're watching those forces over time, and we're judging how in line those forces are with our expectations. Okay. So what was our expectation today? Our expectation was it's an options expiration, so they're going to move towards the largest round number and stay there. Okay, so our expectation is that they should move and rotate around 110 even. So we are at 110. We've been here now for the last 45 minutes to an hour now, essentially. Okay. What is the inside bid and offer? It's 2,000. Okay, which is relatively healthy. It ticked up. It just ticked up, and when it ticked up, there was 1,700. They immediately sold 766 into it, and now there's 1,000 left. Okay, so the inside bids and offers are relatively healthy right now. Okay, now it ticked down that time, and now there's only 400. So that's a little bit lighter. Okay, but it doesn't stay that way for very long. So if it's really light and it stays that way for a long time, like it ticks up, hardly any bid, ticks down, hardly any offer, and it just keeps doing that for like 10, 20, 30, 40 minutes, right? You're in a liquidity hole, which means price very unlikely to move out of that range. Okay. Price tends to settle where supply and demand are at their minimum. You're going to have more liquidity above and below us. It will be harder to get through. Right? Okay. Some things that I might look for, pay attention to, like the one that we were talking about. We've been in a downtrend, and then I get an uptick that is like what I would call a heavy uptick. So like it ticks up, and you maybe see large bids stack, and you see large offers pull at multiple prices when it ticks up or down, right? That is, okay, the liquidity just changed there. Okay, so less offers above us, easier to move up, right? Now, when that happens, are we in a liquidity hole or in a place where we'd start to form a liquidity hole? Not as interested. But if it's been like 45 minutes, like we've been sitting in this hole for a while. So if I saw a heavy uptick, I would be like, oh, maybe not now. Like maybe if it was like we had 6:30 news, and then like 30 minutes later or 45 minutes after that, so like at 9, 10, 15 minutes before the stock exchanges open, I saw a heavy tick, then it'd be like, Later in the day, I'm not as interested, right? But earlier in the session, big tick in the right spot, that perks my interest. something happened and all of the liquidity reacted to it. That perks my interest. And then especially if I was expecting them to be net buying that day, or I had some reason to think that it was going to reverse, right? Then I'm really, really interested, right? Because that's order flow in line with my expectation, right? But the key thing that you got to keep in mind is that, that's just something that's happening at one spot, right? Because what beginners try to do is they'll say, okay, so when I see this heavy uptick that Seth is talking about, that's my entry long, right? Well, that's just like a tea leaf. That's just like one little spot. So if it's one spot in exactly the right spot when I'm looking for it, then sure. But really what I'm trying to do is overall like get the bigger picture about which way the pressure is and why are we moving? Am I moving up? Are the orders like mostly pulling? So like, are we moving up because of a correlated asset? Or is there real volume hitting into those offers and coming in and pushing us one direction? Is there a persistent imbalance in the market orders? That's what I'm trying to determine. I love that question. There's probably so much more I could say about that, but I think that's a good spot. I want to come back to some of these other questions here for a second. I bought a property that appreciated $50,000 off of just the lot. Got a good deal. I can rent it for double. Well, there you go. I think one of the things that's funny is everybody's trying to escape. Now, I don't want to work. I want to escape my day job. Life is work, in my opinion. I think that anything that's worth doing is work to some degree or another. Work can be fun, right? If I go out and we're doing recreation of some sort, right? That to me is still work. Because to me, it's like if I go skiing, right? I'm trying to get better at my snowboarding. I'm trying to develop my skill in the snowboarding. I'm trying to develop my family. There are certain reasons why I'm doing that thing where it's part of my work with my family, right? Everything is work. So the key to life is not how do I reduce the amount of work, the amount of time that I spend working. Because everything that you're doing is working to some extent. Even watching TV is maybe working. It's what am I learning from consuming this material? I'm passing all of that material into my brain, and it's incorporating it into this neural network that it has up there. Maybe consider what kind of content you're consuming, right? But the question is not that you don't work. The question is, what kind of work are you going to do? And are you doing the kind of work that you actually enjoy? Because all work is work and sucks, kind of. Most part. Well, all work that makes you money, let's say. All work that makes you money kind of sucks to some degree or another. That's why they have to pay people money to do them. Because they wouldn't do them if there wasn't money involved in it. Usually. But you can shift your mindset. Right? You got to shift your mindset from I want to play to I want to enjoy what I'm doing. I enjoy what I do. I went into the thing that I enjoyed doing and that I knew was a living, and it was a living that I could enjoy. If you love trading, that's great. But do you love wondering if you're going to be able to eat the next day because of a random line? Right? Not a very good goal. Not a very good goal. Just kind of consider, what kind of work do you actually want to do? Everybody's trying to get away. I don't think that that's what you actually want to do. I think that you want to come in and find, how can I enjoy what I'm actually doing? Because you don't necessarily have complete control over what you're good at. Some things you just, genetics and interest, and I don't know what it is. Like, I don't know why I'm so perfectly suited to site reliability engineering, but it's just like an inescapable conclusion that, like, even though I wasn't looking to go into that I was going to get herded into that role one way or another, right? Because I'm good at it. I don't know why that is. So you might not be able to control what you're good at, but you can control your attitude about it, right? Seth, how do they manage to stay in that number? All the market makers get together and plan this? No, it's random. It's kind of unintentional. So usually the way that this starts is, you know, a big transaction happens. Some guy, he wants to buy a ton of it and he sees the opportunity to take it, and so he just takes it. But what happens is that reduces the amount of latent liquidity in that area, right? For any one individual price, there's only so many people out there that want to trade at that price. And when you've traded them all, and the market makers have exhausted the inventory that they're willing to put up in that spot, there's nothing to trade there anymore, right? And it just gets stuck. And all of the smart guys, they know that happens. And so they're not going to take a trade in that situation, you know? Like, they're not going to take a discretionary, like, make a call in that situation if they know that, you know, they can wait 45 minutes and it will be a more opportune time later, right? So you will, in other words, the point of control, everybody thinks, the point of control represents the area where buyers and sellers were able to agree on price. No, it doesn't. It's random. It's random. They don't intend it. They don't intend to make it happen at all. It's just they all end up with positions there kind of by accident. That's what's so funny about it. So no, it's not organized, but it is a behavior. You can go, so the study you'd want to read, Jean-Philippe Pouchot did this study where he talks about a Walrasian auction. So in my order flow video series, there's a video where I talk about a Walrasian auction and I explain this phenomenon. That's what causes it. It's an empirical behavior of markets created by the order book. Andre, I'd get depressed without working on something. Trading, it can be that if you're passionate and you like data analysis and modeling and working on strategies, but you can make a living. That sounds great. Yes, exactly. Exactly. Like, trading is, if you're an ADHD person, you're often find yourself in this constant cycle of dopamine seeking, essentially. So you're looking for, like, something feels amiss. You've got to do something. You're bored. What are you going to occupy yourself with? And that's a constant struggle for me. I've always got to have something that's going on to bury myself in order for me to be happy. And the market is probably just about the only thing in the world that, like, there's no bottom to it. That there will always be something crazy going on, some new research that you can be digging into, that you can dive your whole life into and never get bored with. It just kind of sucks that, like, the money-making opportunities for it are basically trade other people's money, trade for a firm, or trade on your own. And for a lot of us, trade on your own is the only one that really makes sense or is available to you, and that option kind of sucks. Oh well. You can still do it, though, and you can still have fun. I'm thinking a little bit about using another state's recruitment bonus and relocation bonus for officers to move to another state and really start my life. Like Alaska? Ooh, I don't know, man. Alaska has the highest suicide rate in the country, right? You either really love Alaska or really hate Alaska. Nolan says it's because I'm bald. I don't know what it was that I said that prompted that comment, but I'm going to bet that whatever the context of it was, that me being bald is a symptom of something else and not the cause of anything. I'm not diagnosed, but I understand I'm agitated when I don't do anything in it. Well, yeah. Like ADHD, you do that. All people do that to some extent. It's just not as strong of a thing as an ADHD people. And we often get stuck in those cycles because our dopamine levels are all kind of out of whack because of social media and stuff, right? But that's the other solution. I tell you what, man. If you're having problems like that, then I would ask you, what are the relationships in your life like? Do you have kids? Do you have a significant other? How well are you doing with your significant other? Because that's also a very, very strong indication that your personal relationships are not in order. When your personal relationships are going well, that fulfills that emotional need very, very well. Okay, it is 9 o'clock. Wow, I can't believe that it's that fast. Well, so we were trying to take some notes. So I'm still not 100% sure all of the notes that we want to take. But let's just say in this one, this was a sim trade. Immediately went to target. Treasuries went to 110 even and settled. And U of M, I mostly in line and ignored by markets. So I would say that today was a classic quadruple, triple witching type of day. Shall we put that in the title for today? Classic triple witching mean reversion. Is the 15th today? Yes. Yes. So hopefully, now that I'm writing, typing, and making notes, I will write my scripts. That's one of the goals that I got to have for this weekend. Like to hear your views on free healthcare in the U.S.? Oh yeah, okay, we can talk about that for sure. The healthcare system is really messed up, but I think that we can do better than a social healthcare system. But anyways, I'll see you guys on Monday. Have a good weekend.